Hello guys, my name is CA Harish Krishnan and this is Tuition.in's video for quick revision on CA IPCC's auditing and assurance. I know a lot of requests have been coming in the past for us to do this. So let me take this opportunity to bring CA IPCC's auditing at the shortest possible time, but with a limited coverage. Let me explain what I will be covering here. First up, we will be starting with the basics, and then we will dwell into audit evidences, audit sampling, analytical procedures, so whole of audit evidence, and then I'd move on to documentation, and then I'd discuss about internal controls, which would probably in this process, in this video, at the quickest possible time, let me try and cover around 15 standards, including a quick look on whatever is the reporting standard. So let me just start off so that we will have an idea on how much we can quickly redo and understand. So take help of this video and just use it for a quick revision, right? But I'm going to be very quick. Let me, like in every video of my quick revision that I give an alert in the beginning, I'm going to be very quick on the topic. So if somebody who is watching this, if you have already done this topics once, I think this is going to help you a great time. Like, it's going to save a lot of time because it's going to make it easy. But at the same time, if somebody is completely unaware of the topic, I'm just warning you, this is going to be good to let you know what the topics are, but this video alone wouldn't be sufficient for you to just get great marks. So if you have already had an idea of these topics, then this is going to be amazing. Let's shoot up, let's try it off, and let's try and get great marks. Chalo, let me start off with, I'm going to start off with a very basic definition of what auditing is all about. So what is auditing? Auditing is all about, so how do we go about remembering the definition of auditing? Because right from day one, when you started reading the subject, this is the first thing that you would have understood. Auditing as defined by ICAI says what? Auditing is a independent examination of financial information. Audit is a independent examination of financial information of an entity, whether profit making or not, irrespective of size or legal form, when such an examination is conducted to express an opinion thereon. Right, there is a real reason why I put up the whole definition. I know most of you know it, but the idea is to make very quick understanding of what this whole topic is all about from this definition. Guys, never by heart definitions. It's very easy to remember definitions. How is always raise a question and get the answer to it. When you raise a question, basically there are only 6 questions in English, right? When, what, how, who, where, and why. So let's start asking those 6 questions and start trying to figure out the answers. The first question is, what is audit? So you're answering that question. What is audit? Audit is a independent examination. Question number 1 answered. Now obviously this question leads to another question. What is that? Audit is an independent examination. Okay, if we put a full stop there, that's not going to give you a conclusive part. So what? Audit is an independent examination of what? Audit is an examination of financial information. Of whom? So who is being taken care of here? Entity. Now entity could be a sole proprietor, partnership, company, trust, society. It could be any entity, right? So whether profit making or not, so we are not really concerned about what kind of an entity it is. It could be a profit making or non-profit making, irrespective of its size or legal form. So however is the size, a big entity, small entity, medium entity, right, in trust, society, whatever legal form, when this whole examination is conducted to express an opinion thereon. So this being the key aspect of audit, right, to express an opinion thereon. So picking up some of the key words from this definition, let me move on to the other important concepts from here, that is independence. What is independence? Which means not being subordinate to the wish or will of others, not being subordinate to the wish or will of others. And why do you have to get an independent examination done? See, if your audit is an independent examination, it will what? It will enhance the credibility. It will enhance the credibility of financial statements, right? So then, coming up next to this very important part of the expressing opinion, which is the ultimate motive and the objective of audit. There are two important objectives of audit. So moving up next is objectives of audit. What are the two objectives of audit? Primary objective and secondary objective. So you have primary objective, which is reporting, and secondary objective of detecting a misstatement. Now, all that you need to do here is to try and understand how this works. Reporting, primary objective is reporting. Then obviously it starts raising various questions. Reporting on what? Reporting on what? On the financial statements. What kind of opinion? What kind of opinion? What kind of opinion are you talking about? A true and fair opinion. True and fair. Reporting on what? On financial statements. What kind of an opinion? True and fair opinion. And when do you call it true and fair? Now there are three reasons when you can call that the financial statements are true and fair. When do you say that the financial statements are true and fair? The financial statements are true and fair when the following points, the 3 points are meant. What is point number 1? When there is consistency of accounting policies. When there is consistency of accounting policies. When the entity has complied, all rules and regulations, and when all material items are disclosed, right? So when there is consistency of accounting policies, when there is the entity has complied with all rules and regulations, and when all material items are disclosed. If the answer to all these points are yes, then yes, you can go ahead and give a true and fair opinion on the financial statements. So what about detecting a misstatement? Detecting a misstatement is, again, misstatements happen because of two reasons. One is error and the other one is fraud. This piece of error, you will be throughout the audit, you can be checking it, and this piece of fraud, you can dwell into standard number 240, which is talking about the reporting on fraud. So that's your basic understanding about what is auditing, right? What do you mean by independence? What do we talk about the entity? Why should we get an independent audit? If anybody asks you a question on why independence, right? Why independence? This is going to be the answer. It could possibly be a true or false question. And then the objectives of audit are primary reporting objectives and secondary detecting of misstatements. There are of course some more points to be concentrated on. Let me get to the one of the most important questions at your IPCC level, just talking about basic principles governing the audit. Moving up next will be basic principles governing the audit. Let's look at what are some of the basic principles that are governing the audit. There are 9 basic principles, and I have a way whereby we don't forget even one, right? 9 basic principles which are governing an audit, and it's one of those questions that been always asked for 8 marks in the exam. So let's figure out what are the basic principles governing an audit. Basic principles governing an audit. What are the basic principles that govern the audit? Let me tell you the first 3 points. Let me break it down into 3, 1, 5. This is the quick and easy understanding of how do you go about remembering this question on basic principles governing the audit. 3, 1, 5. How is it? These 3 points are relating to the auditor. These 3 points are relating to the auditor. This 1 point is relating to the understanding of client. And these 5 points are nothing but audit process. These 5 points are nothing but what? Audit process. So let's go ahead and understand what are the 3 points that we are talking about from the auditor's standpoint. Guys, 3 points. I hope you know one of the most basic principles governing the object audit is IOI, which is nothing but what? Integrity, objectivity and independence. So auditor should have integrity, objectivity and independence. Then the second point that auditor should have is about skill and competence. Skill and competence. Auditor should have what? Skill and competence. Then the next thing that the auditor should be having is he should maintain confidentiality. He should maintain what? Confidentiality. The auditor should maintain confidentiality. So there is a rule of confidentiality which the auditor has to follow. That is not disclosing. And let me explain the rule of confidentiality because it's useful in so many places. What does the rule of confidentiality say? The rules, as per the rule of confidentiality, the auditor shall not disclose any information that he gathers during the course of audit to any third party unless permitted by client or it's required by a law or regulation. That is what is the rule of confidentiality. Then one point that is required for the understanding of a client is the client's accounting system, and internal control. Is the client's accounting system and internal control. Then the 5 steps, of course, I hope you know what are the 5 steps here in talking about audit. Right, so we will be doing these 5 steps which are nothing but what? Audit planning, collection of audit evidences, relying on or using work of others, right? Planning, evidence, relying or using work of others. And then of course one of the most important points in audit is about audit documentation, and last and the most important thing is what? Audit reporting, which was our primary objective. So guys, these are your 9 basic principles, and go with the principle of 3, 1, 5, and then you're not going to miss even one in the exam. 3 points relating to the auditor, right? IOI, integrity, objectivity and independence should be like some of the qualities that are mixed with the blood of the auditor. Skill and competence, of course he should be skillful and he should be competent, which means he is supposed to be a chartered accountant holding a certificate of practice. Confidentiality, the rule I explained. Understand the accounting system and internal control. Then follow audit planning, audit evidence, relying or using the work of others, which you can use the work of internal auditors or other auditors, audit documentation and audit reporting. Now picking up from here is exactly what we are going to do in understanding what is this entire audit process, which is what is my major coverage in this particular video. Audit planning is dealt in standard number 300, and what we also need to understand is it is supported by standard number 320 on materiality, standard number 315 and standard number 330 on risk assessment procedures and further audit procedures. Audit evidence, the whole of 5 series, so standard number 500 to standard number 580. There are 11 standards in the whole of 5 series which are talking about collecting of audit evidences. Relying on work of others, you have standard number 600, 610 and 620, which is again being talked about here. Audit documentation is covered in standard number 230 on why are you supposed to do documentation and what is the purpose of documentation, and of course there are other standards. Almost in all standards the last paragraph is about documentation, which mentions why you are supposed to document. And of course standard number 700, 705 and 706, these are again pretty much related to reporting, and of course these 3 standards to be complied at the end once we finish doing this work. So this is our preliminary understanding of what basic principles governing the audit are. So let's start off with understanding. Of course before we start planning, we do have 2 more very important steps, right? What are those 2 important steps that we are supposed to do? Is one is to get the engagement in, that is right, complying standard number 210, which is talking about terms of engagement. So getting an engagement in, and then we will be obtaining knowledge of client business and then start doing these 5 steps by performing all these standards and ultimately expressing a opinion, which is what we are going to do, right? I think I'm clear till here, and straight away let's go ahead discussing all those 8 steps in detail, and let's see all the standards in auditing that are involved in complying with all those 8 steps. So continuing back guys, let's look at the audit process. The 8-step audit process that I'm going to explain will be helping us with almost understanding everything that are there here. So let's go with all the 8 steps, starting up with the engagement of the auditor. Engagement of auditor. And then we are talking about obtaining knowledge of client business. Obtaining knowledge of client business. Then comes the third step, which is about audit planning. Step number 4 is about performing compliance procedures. Performing compliance procedures. Then it's about performing substantive procedures. Performing substantive procedures. We'll be seeing compliance procedures and substantive procedures as part of the audit evidence story. And then if you have done till here, and then possibly next step is about documenting all the evidences. So these 2 steps, basically you collect all the audit evidences and then you go about doing a audit documentation and then forming an opinion. Now forming an opinion is about coming to a conclusion in your mind, forming an opinion. And finally, when you talk about, after you frame an opinion, you will put it in the form of a report. So audit reporting. So guys, that's it. This is the whole audit process that one needs to understand on how we'll be possibly doing this, right? So to start off with, I'll start with engagement of the auditor. Standard number 210 is covering this. And then how do you obtain the knowledge of client business? This piece on how do we obtain the knowledge of client business is dealt in standard number 315. We will also talk about it. And then we're talking about audit planning, where we're talking about standard number 300. I will also, when I discuss 300, I'll give you a quick bite on what materiality is all about. And then we will discuss performance of compliance and substantive procedures, which are in the nature of standard number 500 to standard number 580, SA 580. So these are all the standards that will be coming there. And once again, back with standard number 230 on documentation. These are dealt in the 7 series, standard number 700, 705 and 706. Let's see how quickly we can get and grab to each of these. Alright guys, let's start with standard number 210. What are the 2 things that are discussed in 210? Now, in standard number 210, it is told that the engagement shall be picked up by an auditor, right? When there are some preconditions which exist. So standard number 210, I'm covering 2 things in standard number 210 right now, which is talking about the preconditions to the audit. Preconditions to the audit. And of course, after that we will go ahead and see what are the contents of an audit engagement letter. Contents of a audit engagement letter. So guys, this is what it is going to be, where you're talking about preconditions to the audit and contents of the audit engagement letter, which is what are the major parts of 210. Of course, there is another point that I will be covering after we finish both these. So yeah, quickly, if you know how many preconditions are there, by now you should be able to tell me how many preconditions are there. There are 2 preconditions to the audit. What is it? 1, the first precondition that you're talking about is a use of acceptable FRF. Use of a acceptable financial reporting framework. So if the management is not using an acceptable FRF, then probably you're not taking up the audit, because the financial statements are not prepared in the manner that they're supposed to be prepared, right? So use of acceptable FRF, which is the first and foremost requirement, right? Then moving up next is the second precondition, which is talking about management acknowledging their responsibilities. Management acknowledging their responsibilities. Now the bigger question at this point in juncture is, what are those responsibilities of the management which they have to agree? What are the responsibilities? Management acknowledging their responsibilities. There are 3 responsibilities of the management. 1, which is preparation and presentation of financial statements, design and implementation of internal controls, design and implementation of internal controls, and to provide auditor with the 3 things that they provide the auditor with. What is it? All information that the auditor is required to do the audit, whatever information is required to do all information, additional information, all information, additional information, and unrestricted access to people in the entity, unrestricted access to people in the entity from whom the auditor seeks to obtain audit evidence. So if both these preconditions are present, the answer is yes, then auditor shall, right? So now two situations here, present, preconditions are present, right? Okay, let me do it on the other side so be very clear for you. So if preconditions, I'm taking up this here, two options guys, preconditions. If preconditions are present, right, what are you supposed to do? Accept. If preconditions are not present, now the answer is very simple, the auditor shall not accept the audit engagement. You can refer to the standard, the wordings are very clear, the auditor shall not accept the audit engagement. I'm moving up next. If these points are complied, that means to say preconditions exist, can we take up the audit? The answer is yes. And when we take up the audit, we are supposed to prepare a engagement letter, right? Let me move on this here. What are the contents of an engagement letter? Contents of a engagement letter. What are the contents of the engagement letter? Guys, there are only 6 points that you're supposed to remember here. Look out for them. 1. The objective of audit. Why are you doing the audit? Objective. 2. Scope. 3 and 4 are pretty simple. What are my responsibilities? What are your responsibilities? That you're writing about responsibilities of management, and you're also writing the responsibilities of auditor. And then most important point coming up is point number 5, the applicable financial reporting framework, applicable FRF. Whatever FRF is applicable, whichever FRF is applicable, that applicable FRF, and 6, which is talking about the form and content of reporting, So guys, you got to put up all these points in the letter of engagement, which are called the terms of engagement. So if they ask you a small question, the short question on what are the contents of an audit engagement letter, this is exactly what you're going to put it up, right? What is the objective? What is the scope? What is the responsibility of management? What is the responsibility of auditor? Applicable financial reporting framework, and the form and content of reporting. Now, one of the most important points of the standard that you're supposed to remember is, if all these points, if law or regulation, the wordings in the standard are very clear, if law or regulation prescribe in sufficient detail, if law or regulation prescribe in sufficient detail all these 6 points, then auditor need not record. Then the auditor need not record them in the engagement letter because they've already been told. But just what is supposed to do? State the fact that such law or regulation is, applicable. That's it. So you don't have to write, because already it's told in the law. Why the hell do you write again everything what is told? So you write these 6 points if it is not told. If all these 6 points are told in a law or regulation, if they prescribe in clear detail, then you just state the fact that such law or regulation is applicable. That's it guys. Those are 2 very important parts of the first standard that we're dealing with, standard number 210. And to top it up, there's one question that has been asked in the exam in the past. Should we do this every time? That is, even if it's a recurring audit. See, undoubtedly this will be done in an initial audit, right? So you know what is an initial audit and a recurring audit. If you take up the audit for the first time, where there was a predecessor auditor, or when the financial statements have not been audited in the past, it's going to be your initial engagement. Or if you're doing the audit continuously, that's last year also you've been the auditor, we called a recurring audit. Now the bigger question is, should we send the engagement letter every audit, that is even in a recurring audit, right? The answer is very clear. In case of a recurring audit, auditor shall send the engagement letter in a couple of circumstances. 1, when there are changes in the terms of engagement, you have to send it. Or when the auditor needs to remind the entity, of the terms. So auditor wants to remind somebody, like say for instance there is a change in the management, top management has changed, so the terms are going to be the same, but we got to write it to the new set of people in the management. And then, so whenever there is a recurring audit, you generally need not send, but if there are a change in terms of the engagement, or when the auditor feels that it's need to remind the entity, in that case he will again communicate. So that's a quick bite on standard number 210. To sum it up, we discussed what are the preconditions, accept or not accept depending on their presence, then put up these 6 contents in the engagement letter. If law or regulation already tells it up, state the fact, and in case of a recurring audit, if there is a change in terms of the engagement, or when the auditor feels that there is a need to remind, he will be doing it. Right? So that's all. I hope we've been clear on standard number 210. Right? That takes me to step number 2, which is about obtaining knowledge of the client business. Alright, coming back is stand number 315. What are we talking about in stand number 315? This piece of 315 is about obtaining knowledge of client business. If you have to know what 315 actually is, 315 is about understanding the entity and its environment. We are now only concerned about this piece because stand number 315 is broken down into 3 parts. I will take you through that little later. The other 2 parts of 315 we will take up little later. Right now we will just focus on understanding the entity and environment. So I have signed my terms of engagement. TOI is ready. We've already seen that. Right now we are talking about understanding the entity and its environment. How do you go about understanding the entity and its environment? There are only 5 points that we are supposed to focus here. How many? Just 5. What are the 5 points? Point number 1, in understanding the entity, you understand the relevant industry, the industry to which your client belongs to. Is he a real estate company? Is he an IT company? Is he a manufacturing company? Relevant industry, regulations in that industry, relevant industry, regulations, and external factors, whatever are there. Understand, point number 2, understand the nature of the entity. How do you understand the nature of entity? In understanding the word nature, we're talking about 4 sub points. What are those? What operations do the entity do? Operations. Ownership and governance structure. What is the ownership? Who is owning the company? What is the governance structure? Right? Type of investments the company has made. Then point number 4, we are talking about the way entity is structured, and how it is financed. The way entity is structured and how it is financed. So what are the first 2 points that you're trying to understand about your client? Point number 1, the industry that they belong to, the regulations and external factors. Then understand what kind of an entity is your client, what is their nature, what work they do, what is their ownership pattern, who is owning how much stake, what about their governance structure, who is there where, the type of investments that they have made. Like if you know the type of investment that they have made, so if they have made any investment in another company which they hold more than 51% of the stake, that becomes their subsidiary, right? So you need to see all these points: operations, ownership and governance structure, type of the investments the company has made, and the way entity is structured and how it is financed. If you understand, you get a preliminary idea about what these are. Then the next thing that you need to understand about your client, point number 3, is the accounting policies that they follow. Accounting policies. Now please understand guys, the accounting policies are not a standard list of accounting policies that everybody follows. So therefore, the accounting policies are supposed to be understood from client to client. That's point number 3 you need to understand about your client. Point number 4, we are talking about the objectives and strategies. Objectives and strategy of the client, right? So industry, regulations, external factors, accounting policies, objectives and strategy, nature. You've understood enough, And point number 5, the last point that you are supposed to understand is the entity's financial performance. Entities what? Financial performance. The entity's financial performance. So guys, if you are able to capture all these points and if you are able to answer all these 5 points, I think you have a lot of information about your client. So this is the step number 2 in the audit. After you successfully finish obtaining the terms of engagement, and then you would go about gathering all the knowledge of your client, which is what are involved in these 5 steps. So standard number 315 part 1, dealing with understanding the entity and its environment, in which you're covering all these 5 steps. Alright guys, moving on, we've completed stand number 210, we've completed that part of obtaining knowledge of the client business. Moving up next is standard number 300. What are we doing in standard number 300? We started with audit planning. Now let me talk about 2 very important things here. Standard number 310 is framed in the context of recurring audits, right? Standard number 300 is framed in the context of recurring audits. So how do you do audit planning for recurring audits? That is what is being dealt here in this standard. But then of course we also need to understand that initial audits, how do we do planning in initial audits? So there are a couple of additional considerations that have been identified for doing those initial audits. So you will be doing whole of this in the initial audit plus 2 additional considerations. So I will be talking about that very shortly. Let's now finish up recurring audits. Now considering the fact that it's recurring audits, planning activities are the activities are classified into 2, right? The activities are classified into 2. Concentrate here on this piece. First one is called preliminary engagement activities. Preliminary engagement activities. And then the second part of the story is called planning activities. Planning activities. We will take up initial audits a little later, right? So recurring audits will be classifying into preliminary engagement activities and planning activities. In preliminary engagement activities, you have only 3 preliminary engagement activities. Preliminary means the basic. So you would probably want to start off the audit planning by doing these 3 steps that I'm talking about. Point number 1 is about establishing continuance of client relationship. Establishing what? Continuance of client relationship. Now if you ask me, sir, how do I go about doing or establishing continuance of client relationship? You got to refer to that paragraph in stand number 220. Whatever relationship you had with the client in the past, because this is your recurring audit, is that continuing or not? Is it posing any risk, or it can safe and continue? And then checking out the ethical principles, which is again discussed in standard number 220, right? So establishing continuance of client relationship, compliance with ethical principles, these are the 2 preliminary activities that you're supposed to take up from standard number 220. Now standard number 220 has an exclusive discussion on both these paragraphs, and then once you finish doing both these, you got to understand the terms of engagement, which you finished here, right? The terms of engagement have to be understood. So these 3 are the preliminary, that means the very basic activities that you're supposed to do even before you proceed with any planning. Moving up next, standard number 300 on recurring audits as preliminary engagement, and moving up to planning activities. Guys, planning activities are classified into 2. Planning activities are classified again into 2. One part is called framing up the overall audit strategy, where there are 5 points to cover, and then an audit plan. So guys, what are you supposed to plan here? We got to plan an overall audit strategy. How do we plan the overall audit strategy? There are 5 points to understand in planning out the overall audit strategy. What is point number 1? First thing that you need to understand is, can we use any knowledge, use of knowledge obtained from previous engagements. So if we have performed any engagements in the past about the entity, can we use that knowledge, use of knowledge from previous engagements to the directions required to be followed, by the engagement team. So the auditor has to give up what are the directions that I should give to my team, that is discussed. And then the nature, timing and extent of audit procedures are to be planned, NTE of the audit procedures, and most importantly the reporting aspects are to be discussed, right? So guys, I think we're running short of place on that. So but basically that is what you're supposed to do there in kind of understanding 4 points. Let me repeat once again with the 4 points. If we are using any knowledge of the past, what we are gathered in our previous audits, are we using that? Then what are the directions to be given for doing the audit? And then we also are supposed to understand the nature, timing and extent of audit procedures, and then you might as well have to get an idea about the reporting aspects, and most importantly define the complete scope. I'm writing the 5th point if possible here, right? 5th point, right? Scope of the audit. What is the scope, overall scope of the audit? So if you frame these 5 points, you have a quick understanding of what stand number 300 is talking about as the overall audit strategy. Then moving up next, there is a piece on audit plan. Audit plan. What are the 3 steps that we are supposed to follow in the audit plan? Here only 3 steps are there. First, you got to perform risk assessment procedures. Then you got to perform the related responses to those risks, and then perform all the standards. So basically, if anybody asks you a question on how to do about the audit, I mean how do I plan for the audit? You don't have to plan anything great, you just have to follow all the standards that have been issued. What are those all the standards that have been issued, right? So first step, we will be planning about risk assessment procedures as per SA 315. We will be planning risk assessment procedures as per 315. 2, we will be talking about the responses to those risks in stand number 330, and then we will also be talking about performing other standards, right? So guys, this is exactly what the steps are in planning for stand number 300 on a recurring audit. So stand number 300 on audit planning deals with recurring audits. This whole stuff is to be done every time in an audit, right? When you're starting an audit, establish the continuance of client relationship, ethical principles are to be checked out, and understand the terms of engagement. Then moving up on to planning activities, you're drafting an overall audit strategy and an audit plan and covering up all of this. Now the bigger question is, sir, it is not a recurring audit, it is my initial audit engagement. It is my initial audit engagement. Then what am I supposed to do? If it's your initial audit engagement, you will do all of this, right? You will do all recurring audit planning. All recurring audit planning, this is definitely done. Plus, there are additional considerations. There are what? Additional considerations. How many? 2 additional considerations are there. What are the 2 additional considerations? Now guys, how apt it is to use the word continuance of client relationship in an initial audit. See, there is no relationship of you and the client in the past, right? So how can you use the word continuance of client relationship? So we can't use the word client relationship, continuance. So we will be now using the word acceptance of client relationship. Acceptance of client relationship. Again, stand number 220 only will talk about that. And one of the most important points at this stage is about communicating with the previous auditor. Communicating with the previous auditor. Why should we communicate with the previous auditor? It is an ethical requirement that you communicate with the previous auditor. If we don't communicate as an auditor, you will be guilty under, the Chartered Accountants Act. Of course, it's not relevant to you at IPCC level, but if at all being talked about, it's Clause 8, Part 1 to Schedule 1 of the Chartered Accountants Act. You are guilty for not communicating the previous auditor because the requirement of a standard. So thereby, this is what you are supposed to do in case of a recurring audit and initial audit. So this is exactly the summary of standard number 300 where you are supposed to plan. So we have now done the engagement of the auditor, we understood that, we obtained knowledge of the client business, and of course now we did put a tick onto this piece of audit planning after doing all of this. So we are now geared up with a plan. So all that we need to do is two very important standards at this juncture, which is 315 and 330, which is because we got to perform audit procedures. So in my next frame, I will be explaining you what audit procedures are. From there, how do we go and pick up 315 and then do 330 and then go with the other other four steps that are involved. So in the next frame, let's look at how we are going to perform standard number 315 and 330. Alright guys, to continue with, let's talk about the audit procedures. We are talking about audit procedures. Now these procedures are meant for obtaining audit evidences, audit procedures. What are the classification of the audit procedures? I want everybody to concentrate on this piece or this frame, it's very important. So audit procedures, if you look at what audit procedures are broadly classified into risk assessment procedures, as per standard number 315, and further audit procedures as per standard number 330. So standard number 330 is guiding further audit procedures. So standard number 330 talks about two further audit procedures which are talking about compliance procedures. We're talking about compliance procedures, and then we are also talking about substantive procedures, compliance procedures and substantive procedures. What do you mean by compliance procedures? Compliance procedures, so I am explaining that piece of 330. Compliance procedures are nothing but test of internal controls, whereas substantive procedures are classified again into two broad things: test of details and analytical procedures. Test of details and analytical procedures. Test of internal controls, what are the three aspects that you are testing as part of test of an internal control? So whenever you pick up an internal control, what are the aspects that you are checking? You are checking for the design of the internal control, design, right, existence, that is its design, operating effectiveness, design, operative effectiveness, how effective it is, design, operative effectiveness, and most importantly continuity. Right, 3 points: design, operative effectiveness and continuity are the three things that we are checking up as part of compliance procedure, where it is test of internal controls. Then moving up next, test of details and analytical procedures. Analytical procedures are dealt in standard number 520, where we are trying to establish a relation between financial and non-financial items and study the ratios and trends. We will see that. And then we are talking about test of details. Test of details are further classified into two parts here, right, which is called test of transactions, which is called as vouching. Then we are talking about test of account balances, which is what we call as verification. Right, so this is the broad framework, guys, of what we are supposed to do after we perform the risk assessment procedures in 315. So what is the idea of following up? So now we did 210, then we did piece of 315 to obtain the knowledge of client business. Then after that we ended up doing the audit planning. Now once you've planned, that is your audit planning is taken care of, and then what you will be doing is to continue the further risk assessment procedures and understand what is the risk involved in the story, and then you will go about performing the further audit procedures as per standard number 330, where you will be talking about performing compliance procedures and we will be talking about performing substantive procedures. Now if compliance procedures are performed and test of internal controls prove that the controls are effective, right? If the internal controls you understood are effective, then you will be doing less of substantive procedures, and of course if the internal controls are not effective, you will end up doing more of substantive procedures. We will come back to that in a minute after we understand what is the core content of standard number 315. Now, like I told you, standard number 315 dwells into 3 parts, right? What are the 3 parts of standard number 315? It is about understanding the entity, which we already finished, right? The next is about understanding the internal control, understanding the internal control, and then it is about identifying and assessing the risk of material misstatement. So guys, this is what we are supposed to do in understanding the internal control and identify and assessing risk. Here there are 5 points to cover, and here there are 4 points to understand. Right, let's now quickly see how do we understand the internal controls. What are we supposed to do? Point number 1, here we are supposed to understand the control environment. Control environment. Now, after I finish, I'd move out, leave the frame for you. I think, or I should probably use a much wider space. I think we can go with this, not an issue. Let me put up all the 5 points here. Right, control environment. We try to understand the control environment. Point number 1. Point number 2, we are trying to, after understanding the control environment, it is important for us to figure out the entities risk assessment procedures. Entities risk assessment procedures. Then we will also be talking about understanding the information systems and risks involved. Okay, point number 4 is talking about relevant controls for audit, and 5 is about how these controls are being monitored, monitoring of controls. Nice. At this point, I make a small request before I proceed further. I want you to get to standard number 315, wherever you have standard number 315. If you're not having a material in front of you, quickly get wherever standard number 315 is. So let me take you through the whole of the standard once again very quickly. So let me give you a minute's time to do that. You can put it on pause and go get the material for standard number 315, whichever material you've been following. So quickly get 315. Let me explain you all 3 parts. I think it's one of the most comprehensive standards in our subject, so I think I'll make it easy for you. So we already did this piece of understanding the entity. We already covered the 5 points. You can go back a few frames and see that in the starting our second step was to obtain knowledge of client business, which is what this is. And then now we are doing this step whereby we are trying to understand the internal controls, in which we are understanding the control environment, entities risk assessment procedures, information system risks, and whatever risk, both manual or automated, whichever are there. And then we are trying to understand only those controls relevant to the audit. This has been a point in the past. See, if you remember, you must have studied something in the internal control chapter where it says the internal control is meant for the operations. So operations include finance as one area and also the other areas. So if I use the word internal control, it's a wide term, it's getting to so much. So we will be out of all that picking only those that are relevant for the audit. I hope you're clear about that. And then it is the duty of the management or TCWG to monitor these controls, right? You can't just establish a control and leave it in the air, right? So monitoring of controls is another very important aspect. So if you have finished understanding the entity, which we did, now we also understood the internal controls. So 315, the 2 starting parts of 315 is about understanding the entity and all the relevant internal controls. If you are successful in doing both these, right, if you're successful in doing both these, you have immense knowledge about who your client is, what they're doing, what are their risks, what are their controls. You kind of know the in and out of your client, which is needed to help you identify and assess the risk. But there is a 4 simple step process. Step number 1, identify the risk. Step number 2, assess the risk. Identify the risk, assess the risk. Now, in step number 3, there is something called as what can go wrong, WCGR, right? Identify what can go wrong, WCGRs. These are called WCGRs. Now, like say in a transaction, you might end up doing mistakes in various ways, like you might mess up with the date, you might mess up with the amount, you might mess up with several things. So identify all those items, what can go wrong, and most importantly the likelihood. So if you have the standard in front of you, you can underline these 4 points in that paragraph which is talking about identifying and assessing the risk, which is the theme of the standard, is to identify the risk, assess the risk, see what can go wrong, and check the likelihood. When you know what can go wrong, multiply with the probability, you know how much risk is involved in this entity. So 5 points: understanding the entity, understanding the internal control, and identifying and assessing the risk in this 4 points. That's what we have in that big stand of stand number 315. And of course we have one very important part of 315 which is called as significant risk. It's a question in the exam, guys, which has been asked in the past. What are significant risks? Right? Significant risks are those risks which require special audit consideration. Special audit consideration. Significant risks are those which require special audit consideration. How many risks are classified to be significant risks? 6 risks are there which are classified as significant risk. Point number 1 is the risk of fraud. Risk of fraud. Then recent significant changes. Recent significant changes. Like say there is a change in the accounting standard, there is a possibility that we might not have adopted to that. Recent significant changes in economic transactions. Point number 3 is about risk of fraud, recent significant changes, and then we have unusual transactions. Unusual transactions, risk of related parties. Risk of related transactions involving related parties. I'm not telling these are all wrong, I'm just telling they are all significant risks. They all require special audit consideration. Risk of fraud, recent significant changes in the conditions, unusual transactions, related parties, and then you have complex transactions, right? The complexity of transactions where are involved, and most importantly where transactions where this degree of subjectivity is high. Degree of subjectivity. So you might wish to underline all these 6 points right now because you have 315 in front of you. So this is what are all the 6 points that we are talking about as significant risks. That's it, guys. There are 4 paragraphs which you need to focus. One is about understanding the entity, then the 5 points in understanding the internal controls, and the 4 points in assessing and identifying those risks, and then the 6 significant areas, which I think is an extensive coverage of standard number 315. And this piece, once you finish doing the entire standard number 315, which will help you know what is the extent of risk, and based on that risk you will see how much controls have been set up by the organization. So if controls have been set up by the organization, then we start doing compliance procedures, and based on that we will determine the NTE of substantive procedures, where we will be doing all of this, right? So that is 315 and 330 for you, where we've been talking about risk assessment procedures, and further audit procedures we're talking about compliance and substantive procedures. Let me explain you the relation between compliance and substantive procedures in the next frame. So I'm leaving it on for a second so that you can capture everything very quickly, and then let's move on in deciding what should we be doing in compliance and substantive procedures. Alright guys, let's continue from where we picked up. I did talk about compliance and substantive procedures, right? So now let me quickly explain you the framework of what has happened. Like we have performed stand number 315 on doing the risk assessment procedures. So based on stand number 315, we are discussing about responses to the assessed risk. Responses to the assessed risk. I'm again suggesting keep your note aside with you so you can get back quickly to these standards and figure out what they are. So in 330 we're talking about the responses to the assessed risk. You can either do compliance procedures, so compliance procedures, which is test of control, and then you're also talking about substantive procedures. Now let me explain the relation between compliance procedures and substantive procedures. The bigger question is, when do we do compliance procedures? Right, refer to the piece that I'm talking about in stand number 330. You will find 2 points which we're talking about. When will you do compliance procedures? When will we be doing compliance procedures? Point number 1, when auditor believes that internal controls, when auditor believes that internal controls are operating effectively So if you believe that the internal controls are operating effectively, that's exactly when you do compliance testing to collect audit evidences to say yes, they are operating effectively. Of course, while doing compliance testing, you may also realize that they're not really operating effectively. Then you will obviously, if the compliance procedure detects that they're not operating that great, then what will you do is to do more of substantive procedures, right? So then reason number 2 is where substantive procedures alone do not provide sufficient appropriate audit evidence. Where substantive procedures alone, there are some cases like automated transactions where there is no proof of the transaction happening, so you can't perform substantive procedures in those areas. In such areas, you are only supposed to perform, compliance procedures. So where substantive procedures alone do not provide sufficient appropriate audit evidences, there you are supposed to try and understand performing of compliance procedures. So if you refer to 330, you will find these 2 points that I just talked about as to why or when do you do compliance procedures. Then based on these two, you will determine the NTE of substantive procedures. Determine the NTE of substantive procedures based on what compliance procedures you did. Alright guys, so basically what we are talking about is the compliance procedures will help you determine the NTE, that is the nature, time and extent of how much substantive procedures are we supposed to do. Right, so then at this point in time, let me also quickly have a bite on audit risk topic. Audit risk is a connected topic here because how much audit risk is supposed to take. So the components of audit risk are 3 parts, where we are talking about inherent risk, we're talking about control risk, and where we are talking about detection risk. So a lot of people in the past have complained about not understanding this topic properly. Let me spend a couple of minutes in explaining you. It's a very, very simple concept, right? First and foremost thing that you need to understand is inherent risk and control risk arise at the level of management. Whereas detection risk is framed by the auditor. Detection risk is what? Framed by auditor. Detection risk is framed by the auditor. So you have 315, you have 330 talking about, and then this leading to audit risk, where there is inherent risk, control risk, and detection risk. So IR, what is IR? Inherent risk is nothing but, right, risk of having no internal controls. So if there are no internal controls, there is an inherent risk that the transaction may be prone to fraud or error. There is an inherent risk because you don't have any control on that. There is a possibility that always there exists a inherent element of risk in. So how do I counter this inherent risk that I am talking about? Since there are no internal controls, what is the solution for this? Is to set up controls, right? Because to overcome this, you will do what? Set up controls. Now the moment you set up controls, there won't be any more inherent risk in that areas. Of course it doesn't become zero, but there won't be inherent risk in that area, but there is always an element of control risk coming up. Now what is control risk? To overcome this no internal control situation, you set up a control, but there is always a possibility. Control risk is a possibility that the internal control may fail to prevent or detect and correct a material misstatement. The very reason why you are setting up an internal control is to make sure that it prevents or detects and corrects a material misstatement, but that didn't really happen. So there is a possibility that sometimes the control that you set up didn't work up to the mark, which is what is leading to control risk. Now what's the relationship between inherent risk and control risk? There is no direct relationship, there is no inverse relationship, because what you need to understand is when inherent risk is there, there are no controls, which means control risk doesn't exist. And when control risk is present, which means controls are in place, inherent risk won't be there. So when one is there, the other one is not there in this case. So you can't establish a relation between what is there and what is not there. So therefore they always have to be combinedly assessed. So what you need to understand is that there is a combined assessment of inherent risk and control risk. So anybody asking you what is the risk at the management level, it is inherent risk to control risk. Then based on this, if you believe that the control risk is high, you should frame your detection risk. Now this is, what is detection risk? Risk that the auditors substantive procedures may not provide sufficient and appropriate audit evidence. The auditors risk that the auditors substantive procedures may not provide sufficient appropriate audit evidence. Right? So, risk that the auditor's substantive procedures may not detect a material misstatement. I just got carried away. Right? Risk that the auditor's substantive procedures may not detect a material misstatement. So, you are performing some substantive procedures and those are not able to detect a material misstatement. That is what is detection risk. So, now what you need to do is, if you believe that IR and CR are high, that means your inherent and control is the quotient of that is high, then you should make sure that the DR is low, the detection risk is low. You should make sure that should be, if IR and CR are high, detection risk should be low, and while if this is low, this should be high, so that you can verify less number of transactions, because anyway the internal controls are good, and therefore the conclusion is that there exists a inverse relation between what? Between inherent and control risk, which is combinedly assessed, to detection risk. There is what relation? There is an inverse relation to inherent risk and control risk to the detection risk. So that is 315 on risk and procedures, and 330 this piece of compliance and substantive. Then this is the whole concept of audit risk. In our next frame, we will be talking about standard number 500, where we are talking about audit evidence and all related standards which are very much relevant in the audit evidence series. We will be capturing that in the next frame. So, I am leaving it on screen for a minute for you to just capture and quickly understand what we have discussed in the concept of audit risk. Alright, we're back again. Now let's discuss about the audit evidence. What is the story about collection of audit evidences? Now let me tell you, I'm going to cover almost 4 standards here. I'll be talking about that piece of standard number 500. Let me first talk about standard number 500. Now what are the 2 very important characteristics of the term? What is audit evidence, guys? What is audit evidence? Audit evidence is any information. Audit evidence is any information collected by the auditor. Any information collected by the auditor in support of his conclusion. Any information collected by the auditor in support of his conclusion will be called audit evidence. And one of the 2 most important characteristics of audit evidence, the 2 keywords that we are talking about here, is about audit evidence should be sufficient. Audit evidence should be sufficient and audit evidence should be appropriate. What does sufficiency talk about? Sufficiency refers to the quantum of audit evidence, while appropriateness refers to the quality of audit evidence. So I hope you can collect all this basic stuff. It's not a real problem. The procedures you have seen, compliance and substantive. What is audit evidence? Quantum refers to sufficiency, while appropriateness is talking about quality. One of the most important paragraphs of standard number 500, which is possible to be asked in the exam, is about reliability of audit evidence. Reliability of audit evidence. When do you consider that the audit evidence is reliable? I am giving you 5 points at this juncture when audit evidences are called reliable. Point number 1, external evidences. I hope you know the picture of how does the evidences. Okay, let me quickly talk about that also. Types of audit evidences. Here we are talking about based on their nature and based on their source. So based on their nature, they are classified into visual, oral and written, whereas based on sources they are classified into internal and external. So keeping this in mind, so should I obtain visual evidence, should I obtain oral evidence or written or internal or external? We're going to look at the reliability aspects of the standard. So there is a paragraph in the standard which talks about the reliability aspects, where you're talking about external evidence is more reliable. External evidence is more reliable than internal. External evidence is more reliable than internal. However, don't forget, if internal controls are effective, internal evidences are reliable. Evidence in documentary form, is reliable than visual or oral, right? So evidence in documentary form is reliable than visual or oral, obviously, because that is in the written form, and then external evidence is more reliable than internal. If internal controls are effective, then internal evidence are also reliable. It's not that only external is reliable. And then evidence obtained directly by the auditor, is more reliable. And point number 5 is the most important point. Evidence in original form is more reliable. Evidence in original form is more reliable than photocopy, scanned or digitized document. Photocopy, scanned and digitized documents. So if you are having stand number 500 in front of you, you go to the reliability paragraph, you will be finding all these 5 points down there, right? Audit evidence is any information collected in support of the auditor's conclusions. Sufficiency and appropriateness are the 2 important characters, right? When talking about quantum, the other one talking about quality. Types are classified based on nature and sources, and of course this is the reliability stuff about the audit evidence. Moving up next is stand number 501, right? A quick bite on stand number 501 is about 3 selected items, right? 3 selected items. What are the 3 selected items that are discussed in stand number 501? One is about inventory. 2, litigations and claims. And 3 is about segment information. Now quickly everybody, you can tune to stand number 501, you can go to stand number 501. I don't intend to write the whole stuff, so let me work on it. You can listen to what I say and then also cross check in front of you as to have 501. Right, come to stand number 501 and look at the first paragraph. We're talking about inventories. Now there are 2 very important things in the beginning of the standard from inventory that you're looking at. One is the existence of the inventory and its condition. The existence of the inventory can be checked based on physical verification. Of course, you can also mark with the condition of the inventory, because we need to understand the condition, because we have a inventory valuation principle which is cost or NRV, whichever is lower.